there, good afternoon. You've tuned into ET now, and this is Market Fatafat with me, Cheryl D'Souza. Along with me, I have Vinny Motiwala. Very good afternoon to you, Vinny.
And good afternoon to you as well, Cheryl.
And it is Friday, and decisive moves coming in from the markets. We are, unlike the other days, we have not gone anywhere close to those record high levels when it comes to the Nifty. We, in fact, moved sub 18,700 mark as well when it was at the day's lowest point. But right now, as you can see, some recovery coming in on the benchmark indices, and you can see the recovery also come in on the Nifty Bank as well. So both of them are moving in tandem with each other. Talking about the broader markets today, and surprisingly, broader markets once again is underperforming the benchmark indices. Mid-cap index is down about 1%. Remember that off late you only had the small cap, the broader markets outperform the benchmark indices on the most occasions, but over the last two trading sessions, they have been underperforming the benchmark indices. Look at Nifty Bank, it has actually now recovered all of its losses. It is nudging the positive territory. But however, if you look at the advanced decline ratio, it is very much tilted in the favor of the declines as of now. Let's shift focus. Let's talk about the sectoral indices. Then all the sectoral indices are trading with cuts. It's just the pharma index that is right now holding on to the positive territory. But look at metals, top sectoral loser down 2%. Auto is down 1%. PSU Bank Index, Energy, as well as IT Index are the other set of losers in trade today. But there's a lot of stock-specific action that is happening, and that's exactly what we are going to discuss on this edition of Market Fatafat, isn't it, Vinny?
Absolutely, and let's get started with all the stocks that are buzzing in trade. And today to talk about that on the technicals, we have Swati Hotkar joining in with us, while from the research team we have Harsh as well as Accenture joining in with us. Very good afternoon to all three of you all as well. And let's move on and talk about the first stock that is going to be in focus, and that is SBI Cards. We have SBI Cards. Actually, we had the credit card data that came in, and that is why we're keeping SBI Cards in focus. And we have a couple of notes, brokerage notes that have come in on SBI Cards, especially from Jefferies, where they're saying that in terms of SBI Cards, yes, we're seeing a strong growth coming in, but the spends, that is where we saw a dip coming in the shares of the company. Other than that, we are also seeing that, what they are highlighting is that it is unclear if it was mainly due to lower corporates or retail spend. So that is something that we still need to figure out. Other than that, industry spending growth was up 24% year-on-year basis in the month of May. SBI Cards rose slower YOY, and market share also slipped sequentially. This could actually have been due to the lesser focus on corporate spendings. Among other key card players, we have seen Axis Bank as well as ICICI Bank that gained 54 basis points as well as 30 basis points respectively in terms of the spends of the share. So yes, today we've seen that maybe a slight bit of that slower growth rate for SBI Cards is something that is keeping pressure on the company. Though yes, strong growth was seen, but at a slower pace is the word coming in over there, and keeping an eye out on SBI Cards.
All right, let's shift focus and let's talk about Orchid Pharma. And sources have told ET now that Orchid Pharma has gone ahead and launched a QIP. And on back of that particular development, you saw the stock hit a 52-week high, locked in the upper circuit of 5%, as you can see it on your screen as of now. The deal size of the QIP is approximately 300 crore rupees at an indicative price of 403.93 rupees per share, which is actually approximately 10.6% discount to yesterday's closing price. So on back of that development, the fact that they've gone ahead and launched that QIP, you can see Orchid Pharma that's seeing a sharp uptick. It's locked in upper circuit 5% and is at a 52-week high.
Okay, that's Orchid Pharma for you, locked in upper circuit as of now as well. Let's move on and talk about Interglobe Aviation. And Swati, that's the first stock that you're going to talk to us about on the technicals. The stock is trading at a 52-week high when you're looking at it right now. So when you look at it in terms of a 52-week high, would it still be a good buy at the current levels?
It's definitely, the setup is really very, very strong on the technical front. From the last 3 months, we are witnessing that this particular stock is taking a very strong 20 DM and bouncing back towards the new high. Also, the interesting fact that it is trading in the higher bottom formations, which indicates that there is much more potential upside from here henceforth also. I believe it has a very strong, but this particular is very strong, and it's likely to continue this positive rally towards 2600 levels. So those who are having any long positions, they can definitely hold on. Whereas on a downside, as of now, the immediate support is placed at 2420 levels, which are the cluster levels. So the long positions can be kept in hand with for a upside of target of 2600 and keeping a stop loss of 2420 levels.
All right, so upside likely to be sustained by Indigo. The target is 2600 coming in from Swati. But let's talk about Anthony Waste. And Harsh, why is this particular stock in focus in today's trading session?
Well, absolutely. Yesterday, Cheryl, there was a large block deal on Anthony Waste that happened. We had a buyer in the name of Miri Emerging Markets Fund, which bought around 2.5 lakh shares of Anthony Waste to try and quantify the volume on that. That's roughly 1% of the total market capitalization, almost 2% plus of the free float capitalization of Anthony Waste. So a very solid buy coming through in terms of a buyer and an investor coming through for Anthony Waste, and that's surprised a bit on the positive. In fact, the stock is up 11% as we speak. So a good amount being invested through by Miri Emerging Markets Fund into Anthony Waste.
Okay, let's move on and talk about the next one. And Bharti Airtel is the one you've picked out for us, Swati, on the telecom space. And from the telecom space, what's the view on Bharti Airtel? Continues to be a top pick?
Yes, the setup of the Bharti Airtel is definitely positive. On the weekly chart, we can see that the stock has formed the rounding bottom formation and just heading upside in the northward direction. The interesting fact that it might face a resistance at around 870, 880 levels, but I believe in this kind of a falling market also, the strength of this particular stock remains very at a higher level. I believe 880 will be the first upside levels we can see about that level. 900 levels are getting open for this counter. So definitely the view is positive because the stock is well placed above all the important moving averages. So one should hold their long positions as long as the stock stays above 840 level. So that will be act as a very strong support level. And I'm looking forward that 880 and 900 levels can be seen in the coming few trading.
All right, shifting focus then from Bharti Airtel onto the IT space, and Ashesha, IT sector has been one sector that has been in focus. The entire week we've had every day we've had one note come in from brokerage companies which have actually highlighted the fact that the near-term outlook for the IT sector looks tough. But why is IT sector in focus in today's trading session?
Well, yes, the entire IT pack is in focus today thanks to Accenture's results that came out overnight. Although the results were largely in line with what the street was working with, the company has gone ahead and cut its guidance for FY24. They've cut their guidance from 8 to 10% band. They've cut it to 8 to 9%. Margins guidance continues to remain stable at 14.2%, and on the back of Accenture results, we have a couple of notes that have come in on Indian IT stocks. First up, we'll talk about Jefferies' note that has come in. Say that Accenture Q3 results implies a negative read-through for Indian IT stocks. Sharp moderation in bookings growth suggests rising scrutiny as far as IT spends are concerned across the globe. JP Morgan, meanwhile, has also come out with a note where they say that Accenture's guidance implies no growth recovery into the year end, and they also say that second quarter FY24 results for Indian IT companies could also be on the weaker side. They continue to remain negative on the IT sectors on account of Accenture's results and the notes that have come in. The entire IT sector is in focus today.
Okay, keeping an eye out of the entire IT pack and how their numbers will shape up will be very interesting to see as well. But let's move on and talk about Tata Steel. We have Tata Steel in focus because Investec has come out with a note where they've actually increased the target price for Tata Steel from previously 128 rupees per share to 135 rupees per share. They're maintaining a buy rating on this one. Now, this is mainly on the back of the annual report that was Tata Steel. What they're saying is that, what they saw in the report is that Tata Steel seems to be prioritizing mainly in terms of the growth with the purpose of ESG embedded in it, and the company reiterates in terms of deleveraging the target, favors well in terms of working capital management as well, and operates within the stated balance sheet benchmarks and stayed committed to incremental pension buy-ins as well. Now, obviously, on the back of this, they are keeping an eye out on Tata Steel. Tata Steel, as of now, the target price that they've given is 135 rupees per share, which is that they're saying that the positives that they're seeing coming in from the annual report, they're baking that in that target price that they've given as well, the revised target price. So yes, as of now, the stock is not doing anything great, just down 0.6% in trading.
All right, let's shift focus and let's talk about Dr. Reddys. Swati and Dr. Reddys among the pharma pack. Do you think this one is standing out, worth an investment?
Definitely, on the technical front, this counter is really doing very well on the daily chart. today it has given a flat pattern breakout with a very positive indication. Also, the interesting fact that the today's candle is a very strong candle because open and low is the same level. Whenever we get such kind of a candle, definitely we are getting a positive momentum in the coming few trading sessions. I believe the stock has a potential to reach up to 5100, 5150 levels. So the view is definitely positive as long as stock sustains above 4940 levels. That will act as a very strong support level. So definitely one should hold their long position, or else they can initiate a current fresh long position at the current market price also for immediate target of 5100 to 5150 and can maintain a strict stop loss of 49.
Alright, so that's the word coming in on Dr. Reddys. Let's shift focus. Let's talk about LG Balakrishna and why this particular counter is in focus, because you have a note coming in from B&K, which is actually giving a very big thumbs up to LG Balakrishna.
I can see it on
You can see it on your screen also. It is 6% uptick is what the company has logged in today's trading session. What B&K is saying, the LG Balakrishnan and brothers is capitalizing on opportunities to expand its supply of products for the electric vehicle. They're saying that the company aims to have its content for EV to be higher than the internal combustion or ICE vehicles. Also, what they are saying is that the company is focused on value-added products in the metal forming division, and foray into the industrial chain products will further drive growth for the company, and they're expected to make a meaningful contribution to the revenues from FY25 onwards. They're saying that the stock is trading at an attractive valuation of 10.1 times adjusted EPS for FY25, and they believe that the concerns over EV is misplaced. And with allaying fears of EV on the company's business, LG Balakrishnan is set to command higher valuation multiple in line with other auto and companies as well. Therefore, they maintained a buy stance. They've in fact hiked the target quite substantially from 962 to 1,443 rupees per share. And you can see with that thumbs up coming in from the brokerage firm, you can see the stock was soaring in trade.
There was clearly a big thumbs up coming in there for the stock. But let's move on and talk about HCL Tech. Cheryl, you know, in the IT pack, we all know it was a bit sluggish. There's nothing exciting that has happened in Nifty IT. But HCL Tech has been one stock which has done better than the others in the IT pack. And Swati, this is making a list of a lot of technical analysts as well. Is this your favorite in the IT pack? And what is the next high that we could see? Because the stock recently touched its 52-week high just this week sometime.
You have rightly pointed out that from the overall IT sector, HCL Tech is really doing very well in such kind of a market. If we look towards the different charts such as the Infosys or Tech Mahindra, those particular stocks are into the laggard system, but HCL Tech is really doing very well. If you look towards the monthly chart, from the last 4 to 5 months, this stock was stuck between the range of 1140 to 1000 levels. So that was the 140 points consolidation phase, and in the last month only we have got a clear breakout of 1140 levels on the closing basis, which is a very positive indication on the technical front because the breakout is on the monthly chart. Now I believe this rally is likely to be extended towards 1250 to 1300 levels. Slowly and steadily the stock will reach up to 1350 levels. So definitely one should take a long positions at the current market price. Stop loss can be kept at 1120 for immediate target of 1250 and 1300 levels.
Alright, so that's the view coming in on HCL Tech. But let's shift focus. And Harsh, Craftsman Automation, that particular counter, why is it in focus in today's trading session?
Well, yes, again on the back of very interesting block deal, Cheryl. So we had Goldman Sachs pick up around 2.5% in Craftsman Automation. We also had the likes of Axis Mutual Fund pick up around 0.5% odd of stake in Craftsman Automation yesterday. That's the news which has come through. But on the flip side, why is the stock trading lower despite these two behemoths coming through is because Murali Srinivasan, who is also the promoter at Craftsman Automation, has sold 8 lakh shares, roughly 4% of the outstanding share capital of the company. And what this seems to be suggesting, rather the shareholding pattern seems to be suggesting, is that he's been reducing his stake. In fact, he's brought it down from 10% at the end of FY22 to 9% at the end of FY23, and now a few more percent of stake given up in this particular block deal. But that's what's really keeping Craftsman Automation in the news today as well. Promoter exiting a bit, And what we're seeing is the likes of Goldman Sachs and Axis Mutual Fund up some of those shares.
Okay, let's keep an eye out on Craftsman Automation. Let's move on and talk about HDFC on the charts then, Swati. This one has been in more of a range-bound mode in the last 6 months when you look at it. 2,500 to these 2,800 levels is what it's remained in. What is the view now on HDFC?
I think perhaps if you are seeing the larger degree from last 4 to 5 months data, yes, definitely it got stuck between the range of 2,500 to 2,800. But if you look towards on a smaller degree for a turning point of view, from the last 2 months, the stock was trading in a downward sloping trend line. Now, from last 2 to 3 days, we have seen that this particular counter has given a breakout of a downward sloping trend line, which means a short-term reversal we are witnessing into this particular stock. And I believe this positive momentum is likely to be continued towards 2,800 to 2,850 levels. So a short-term pullback rally can be seen into the counter. So one can hold their long positions or initiate their long position at the current market price as well. Downside, the immediate support is placed at 2,680 level. So they can hold their long positions by keeping a stop loss of 2,680. I'm looking forward for the target of 2,850 levels on the high side.
All right, shifting focus in, Ashesha, let's talk about landmark cars, and this particular counter has been in focus. We all know that there was a huge block deal that took place, but fill us in with all the details with regards to the block deal.
Well, yes, it is clearly the season of block deals, isn't it? The stock is soaring in trade today, 8.5% higher as we speak. And this, as you mentioned, is on account of a block deal that took place. About 12.5% equity changed hands through 16 bunch trades that took place today morning. And TPG Capital is the most likely seller. Reports suggest that deals were to happen at about 0 to 5% discount to yesterday's closing price. And it was launched via ICICI Securities. Account of this block deal that took place today morning. The stock, as you can see on your screens, is soaring in trade today, 8.6% higher in trade as we speak.
Okay, let's move on and talk about another auto name, and that is Hero Motors, Swati. What is the reason that you picked out this stock for us? On the technicals, are the charts looking very attractive here?
See, stock has already given a very good kind of rally in the last 2 to 3 months from almost 2,300 towards 3,000 levels. And if you compare this particular counter with the another stock such as M&M or the Hero M&M, this particular counters are really facing a very strong resistance level at the high level and witnessing a profit bookings on the higher sides. As of now, from the last 2 days, we are witnessing a strong selling pressure at around 2,850 levels. And I believe it will again test the support of my 50 days moving average, which comes to nearby its 2,650 levels, 2,640. So the view is a bit cautious because we are witnessing a strong resistance at the higher level. So one should book their profits or avoid a long position at the current market price, because I believe that this selling pressure is likely to be continued in the coming few weeks as well, as the stock will find out a support at around 2,650, 2,600. So it's a cautious sign on the Hero Motocorp from my end.
Okay, keep an eye out on that for Hero Motor. But let's move on and talk about Voltas. This one is in focus. Why? Because we've seen a downgrade that is coming from UBS. Also the fact that, the summers wasn't as hot as people were expecting, or the longishness into it was hot for us. We surely did feel the heat, but the sales didn't feel the rise and what we normally see in terms of the trends coming in there. So yes, we are seeing a downgrade that is coming from UBS on Voltas to a neutral rating from a previous buy rating. They've cut the target price to 840 rupees per share from rupees 1,200, which was the previous target price. What they believe is the industry blues is to persist, and the market share with OPM's up is a tough ask as well. Now the moats with the lead to industry leading profitability and the lead in the market share is receding for the company, and significant consolidation in the supply chain will dilute large importer advantage as well. Over and above that, they've also highlighted that a short-term overcapacity in room AC segment and aggressive pricing from new entrants will be a threat and a challenge maybe in terms of returns as well. Rising competition will put pressure on the margin, so that is why UBS has cut the FY24, FY25 earnings estimate to 22% and 31% respectively for Voltas. And as of now, you can see the stock is trading at the day's lowest point, down almost 4%.
All right, let's shift focus and let's get to that big ET Now exclusive post, which we saw a good stock reaction coming in for IndusInd Bank. You have Hindujas that may soon get RBI's approval or final approval for increasing stake in IndusInd Bank. ET Now has learned from the sources that Hindujas may invest about 10,000 crore rupees to increase their stake from 15% to 26% in IndusInd Bank. Ankur Mishra is here with all the details. And Ankur, fill us in, what are the finer details that you've picked up from your sources with regards to this?
Yes, sources say that Hindujas are likely to get final approval from Reserve Bank of India for increasing stake in IndusInd Bank from current 15% to 26%. What we have gathered through sources is that the process of complying with the norms of Reserve Bank of India was on, and in that Reserve Bank of India had already given in principle approval to the bank for increasing the stake to promoters. And in that process, there is a form called R1 which was applied by the lender, and all the formalities which are needed for applying for increasing the stake are completed, and we have been told that now regulator may give the final approval for increasing the stake very soon. We understand that the promoters are likely to infuse around rupees 10,000 crore capital for the same, and it is likely to be done by IndusInd International and other companies. Now, as far as the process completion is concerned, we understand the whole process takes 60 to 90 days, and since the application was already made 2 to 3 months back, the final approval may happen soon. And as far as the timeline for transaction is concerned, we understand that in Q2 of current financial year, this transaction may take place subject to approval from Reserve Bank of India.
Okay, a big update coming in there for IndusInd Bank, and thank you so much for that story, Ankur. Surely a one to watch out for in trade as well. On that note, viewers, we're going to slip into a very short break. Don't go anywhere. We'll be back with more stocks after this break.